Good evening, everyone. Welcome to Officer 24/7. My name is Niharika Bhatnagar, and I'm with you with the specific area of JIIB, CIB English Medium, and I'm here for the specific ABFM Maha Revision, everyone. I hope I am audible as well as clearly visible. Good evening, everyone. Yes, the session has started. Thank you so much for the patience. Required a little time. There was a lot of work to do. So let's continue with the session with all that spirit that we have today. Everyone, first of all, please share the session, like the session, subscribe to the channel if you haven't done it yet. Okay, everyone. Chaliye, let's begin with it. Uh, till now, we were done with all these things already, but in the last class, that was our Maha Marathon. Right now, we are talking about Maha Revision. We'll be quickly moving on to all those important topics further as well. So, everyone, first of all, please share the session, like the session, and also subscribe to the channel. Everyone, chaliye, let's begin with the Maha Revision. Uh, with all the particular efforts and the energy that we have today. Everyone, the first question says, what are the financial rights of an equity shareholder? If I talk about an equity shareholder, what kind of rights do they have? Number one, the right to income, only the right to retain surplus assets in case of liquidation only, the right to income and right to retaining surplus in case of liquidation, and the last part is right to vote only. When we talk about equity shareholders, they are the scavengers of the organization. Scavengers means whatever is left by the end of the organization. When the company is dying, whatever is left in terms of profit, even when everybody else is paid off, they get the last. So they are the people who are actually living on the leftovers. So they have the right to receive the dividend, and yes, they also have the right to receive the surplus assets at the time of liquidation. But normally, by the time the company liquidates, nothing is left for equity. Practically nothing is left because everybody else gets paid off, and then equity is left with just in the amount. And normally, they don't even get that money because you have to pay to the lawyers, you have to pay liquidation wala. The process is very long. So what happens is not even a single penny is left for the equity. The money gets exhausted way before that. Here comes another question. Out of the following alternatives, very good Neetu ma'am, that's C, correct answer. And Anup sir, that's C again. Shiba ma'am, good to see you ma'am. We were in the last class as well. Chaliye, moving on to the next question. Out of the following alternative methods of project evaluation and selection used in capital budgeting, which one of the following combinations in the code corresponds to discounted cash flow methods? पता है there are overall two methods in terms of capital budgeting. मतलब two types. Capital budgeting overall can be seen in two types. अच्छा, इससे I remembered something, everyone. Tomorrow 4 a.m. ठीक है, 4 a.m. Please remember, our Chalisa will be uploaded. Everything in a summarized form at a speedy manner. So everybody who's preparing for the first time, that is not meant for you exactly. Everybody who has done it earlier, it is beneficial for all those people because in this case, we'll be covering the entire theoretical portion at a speedy manner. So formulas and all, I have kept a few formulas and all in it for you so that you don't really have to look forward for to any other formulas कि यहाँ से देखें वहाँ से देखें. I have given all the formulas in that specific file itself. Okay, so we'll start with 4 a.m. so that everybody who will be going for 8:30 time, they won't have a problem. Good evening, ma'am. Everybody, please share the session, like the session, and subscribe to the channel right away. Chaliye, now let's talk about this specific area further, everyone. What do we mean in this specific area? When we talk about capital budgeting, it is based upon two methods. One is traditional and one part is basically the modern ones. Among these specific areas, what they exactly say is in terms of your capital budgeting, which is there are two types. Number one is traditional, which was based upon the method. If I said that I'll receive 10 rupees after 2 years, it's 10 rupees only. And then in the modern, it is not the same. exactly it is not the same in the modern era. The reason is, in the modern method what happens is, they said time value of money, it has to be taken into consideration. But in the book they had written, um, the bird in the hand is better than two in the bushes. Matlab, what you have at present is basically something which is certain. But what you have in terms of uncertainty behind the bushes, you know there are two, but you never know whether you'll be getting those two or not. So there's an uncertainty out there. So then when you have an uncertainty, you have to bring back to its present value. So in this case, that present value factor is done in the modern methods. Internal rate of return uses it. Payback uses it. No, payback is not using it. Discounted payback uses it. So profitability uses it and NPV uses it. So I've got 1, 3 and 4. The correct answer is B. Everybody, how many of you are going for B there? Neetu ma'am, I think I saw your answer there. That's correct. Shiva ma'am, that's correct. Everybody, please keep on sharing the session. I know module B and module C is quite difficult, but I think you cannot really run away from the fact that this would be there in the examination. So everybody who has been thinking कि ठीक है ना, we'll focus on A plus D more. Till the time I was actually focusing upon this part now, even I was clear about the fact that whenever someone is studying, I will always tell them focus on A and D more, because this comes in the examination more than B and C. But to be very honest, everyone, just look at the particular strata. This might come for 55 marks, and the remaining 45 is still belonging to B and C. So you cannot really escape from BSc, B and C if you really want to pass. So please make sure everybody who is basically someone who doesn't like the practical part a lot, just go through the numericals, or at least I would say the MCQs that we are dealing today, so that you can understand what kind of questions can be asked in the exam. Okay. Anyhow, moving on, sequence the following in the capital budgeting process: cash flow estimation, identifying discounting rate, then project selection decision, determination of NPV. This is the point, and then they ask you to choose the correct answer there. Everyone, choose the correct option. I Excuse me, I hope this is visible now. First of all, we have a specific, I would say one of the basic thing that happen is, you need to know what kind of cash flows you're getting in the future. Okay. So in this case, the very first thing that you need to do is the cash flow estimation. This part is done. So I would say these two are definitely out. Once you get that amount, what do? You have to discount it further, you know? So that would be A. Then the second one would be B. This is also correct, but project selection. Selection is normally at the last. So in this case, it has to be 1, 2, 3 and 4. My answer is basically 1, 2, sorry, A, B, D, C. Everyone, the correct answer is actually B. Very good. Acha, next question is a practical one. A project has a net initial investment of 50K, is expected to generate net cash flows of 20, 25 and 30 in the next 3 years. What is the cost of capital? Take it up, everyone. Initial investment is 50,000. Everyone who's scared of the numerical part, I don't want to do it, I don't want to try it, just try it with me. I'll just keep my calculator in my hand itself. I normally have it, so I'll do it with you, with the calculator itself, so that you don't get scared ki acha how to do these questions. Your cash flows are 20,000, 25,000, going slower deliberately so that you can understand how to deal with these. 30. The question says you initially got 50,000 in the business and you have got 20, 25 and 30 in the upcoming years. I expect at least one numerical from the area of NPV can be there. So please make sure that you are doing this properly. What do we have here, everyone? They said the capital budgeting, cost of capital is 12%. Since I have 12% there, this is the calculator. I hope this is visible clearly. Done. है ना? So in this case, what do we need to do is, this is 1 plus 12%, everyone. I'm clicking on 1 plus 12%, making it 1.12. So take 1 divided by 1.12. This is the particular factor calculation. 1 divided by 1.12, giving you for the first year it comes out to be 0.892. In the first case it comes out to be 0.892. Clicking on just equal to, again what it was, 1 divided by 1.12, writing it here above, 1 divided by 1.12, giving me the first value 0.892. Just clicking on equal to first gives me the specific amount of 0.797. So in this case it is 797. In the last case, just clicking on equal to, again I did nothing else. What I did was 1 divided by 1.12 and just clicked on equal to 2 more times. I've got this as 7 point. This is 0.711. Everyone, once you have got these factors, then all you need to do is just multiply these terms. Okay, this will give you the valuation of each and every aspect there. Everybody visible clearly? Achha, am I audible now? Clearly audible now? Neetu ma'am, Anup sir, Shiba ma'am, 9095. Very good. Okay, let's look at this. There would be my little variation in this area because this is very normal. 20,000 into 0.892, slight variation can be definitely there. This is 17,840. Next is 25,000 into 0.797. Today I've got a few case studies which are small case studies. For bigger, you can review the other case study area that we have discussed. Okay, 30,000 multiplied by 0.711, giving me a value of 21,330. So 21,330 plus 19,925 plus 17,840. My total comes out to be 59,095 and I had 50,000. Absolutely correct. My answer comes out to be 9095. Regarding 9095, the nearest amount is basically this 9042 based upon the approximations, I would say. So in this case, what's going to be the answer? The answer is 9042. You don't really have to worry about these kind of questions that much. Matlab, to be very honest, whenever you do these questions, just keep your horizon bigger. When I was, we did the capital budgeting when we are in our graduation. Barely, I would say, I was maybe 19 at that point of time when I did this. Okay, so when I did this, even I used to feel that capital budgeting is very difficult. But once you understand the concept of it now, whatever they make out of it, nothing's gonna change. You just need to calculate based upon what? 1 divided by whatever your discounting factor is. This determines your fate. 1 divided by 1.12. Just keep on clicking equal to. Once you have got your discounting factors, this 20,000 into the discounting factor, 25 into discounting factor, 30 into discounting factor. Capital budgeting is something which will be definitely there in the examination. You do whatever, everyone. Normally, this particular topic is never skipped. NPV in the either in the form of theory, either in the form of practical. And the worst way to give this is giving a theoretical question but based upon this practical part. So you just cannot escape the NPV portion at all. That's one particular thing you really have to understand and you have to surrender to it. So please make sure that you are not scared of the numerical part. Even if you don't like the numerical part, just stay with me, do that particular question, whatever I'm doing in the class at least, so that your horizon is broadened up enough. Because I would never say कि देखिए the same question would come in the examination. But what can happen is similar questions can come. What can happen is the same concept can come. So that conceptual part or the specific topic that definitely would be there. So you have to keep your horizons open for that. Okay? Everyone, how is the payback period calculated? Go ahead and answer quickly. How is the payback period calculated when the net cash inflow every year is the same? Uniform cash flows. Everyone, I am receiving 10,000 every year and I have got 1 lakh rupees with which I'm starting my business. If I've got 1 lakh rupees with which I'm starting my business, so one thing is for sure that my business is receiving funds every single year, है ना? So in how much time I can recover that funds? The time period in which I can recover my funds would be what? It would be roughly 10 years, है ना? Whenever we talk about payback period, na, payback period is the period in which we can recover our funding. So in this case, what will you do? Whenever you have to calculate payback period, you take the specific amount that you are supposed to calculate and you divide that particular amount with what? The initial investment that you have made. Say I invested 1 lakh rupees, and every single year I have got 10,000 back out of it. So that means in 10 years I will definitely recover the entire amount. So in this case, initially invested divided by estimated, A is the answer, है ना? Rest everything doesn't really match up or add up there. Very good everyone, the correct answer is actually A. Everyone, a few theory questions there. Which document governs the right and obligation equity shareholders in a company? Articles of association, prospectus, memorandum and articles of association, or the share purchase agreement? वैसे तो I have got more of theory questions today. So because in the examination, even what they do is they put more of theory questions, to be very honest. Even from module B and module C, this doesn't happen that they will give you only numerical questions from these areas. The topic comes in the examination, but more of a portion which is the numerical part is converted into theoretical area altogether. Okay? So in this case, the correct answer is basically rights and obligations of the equity shareholders, memorandum and AOA. When we talk about memorandum, it is the company with the external world. So this is external, this is for the external working, and for the internal working there is the articles of association. So in this case the answer is C, everyone. Done everyone? Done with the question? In this case it is MOA and AOA. Very good everyone. Let's move on to the next question. The question says, in which scenario do preference shareholders get voting rights on all the company resolutions? Ideally, I've said it so many times that preference shareholders do not have any voting rights. So they have no voting rights. So when is the particular situation when they have it? When the company is undergoing a liquidation, when the company issues new equity shares, or when dividends have not been paid for 2 consecutive years, or when the company decides to issue the bonus shares. The rule clearly says when the company fails to pay the dividend for continuously 2 years, these preference shareholders need not to wait. For them, even the scenario turns out to be that if the company is not paying us, each and everyone has the right to get their dividend in any case. Okay? So basically, once you are not paid properly, you have the right to have this in terms of the consecutive years. So basically, if the company fails to pay dividend for 2 consecutive years, then they also have the right to vote. And this is the only scenario when they actually have this right. Okay? Then next point. Why is preference capital considered as a quasi-risk? It provides full security like debentures. It is entirely risk-free. It is safer than equity but less secure than debt. It guarantees dividend payment every year. It's called a quasi-risk. मतलब it's not having complete risk, but yes, it has slight risk. है ना? That is what we define as quasi-risk. Everyone, in terms of quasi risk is basically, yes, it has risk, but it is not completely risk free, or it is not having pure risk, just like equity. And debt has no risk at all. So in this case, it is basically near to both of these. That's why it's called a hybrid security. As per module D, first chapter of module D, hybrid securities, preference share is the first hybrid security which they talk about. One part is the one corner is the debt, the other corner is equity, and between the two, picking up the similarities of debt as well as equity becomes our preference shares. The shares in which, what do we have? The shares in which we can say they have the certainty like the debt, but they also have to take the risk just like equity, because they are ultimate the owners of the organization. Na? It is safer than equity but less secure than debt. Everyone, second stage financing typically provides the funds for which of the following: seed capital, commercialization, working capital of young firms, or preparing for an IPO. I believe this can be there in the examination in the point of view of in the case study format. You can find the second stage and the entire stages in the summary module. I've covered that part in detail in summary module there. Summary module C and D, where we have covered na A and B, C and D. There you can find this part. Acha everyone, I hope you have already gone through the IIBF book questions that I've shared. Today in the morning at 7 a.m. there was a particular session there, 7:30 I believe. So you can review that particular session. So you can do the entire IIBF book questions from there itself. Seed financing is basically, see, second stage is basically when you're done with the commercialization. Once you're done with commercialization, you're looking forward towards expansion. So commercialization is already done. Seed capital is actually the first situation, and preparing for IPO is just after the third one. So in this case, it is actually working capital for young firms during their growth period. Then comes pipe. Which of the following statements is true about pipe, everyone? Number one, pipe deals involve the sale of publicly traded shares to private investors. Pipe deal always involve equity shares with no convertible securities. Equity is never convertible. What would you make? Something which is already personal. How can you make more personal? है ना? So that doesn't make sense. Then pipe deals are a form of private equity investment, or the pipe deal often provides liquidity to the companies with limited access to traditional capital market. Everyone, according to you, what is pipe? वैसे ना it should be written in this manner. So I'm just converting. It has been written like 1, 2, 3, 4. No, it should be A, B, C, D. So in this case, the correct answer is actually pipe is basically those specific shares which are as such public, but they are dealt with private investors. What I do is, there's a particular company, and there what I wanted was, ma'am, basically na it is publicly traded company which is trying to have someone. See, if there is a particular person who's already very social, he already has a lot of people, but he decides that nay, he wants to have an exclusive friendship with certain person. That is like pipe there, because this organization can raise funds from general public, but then they decide ki nahi, I want this particular person as an active member of my organization. That is why we call that pipe in this case is basically the ones which are private organizations, but the public organizations, but where we have some kind of private investments. So answer is actually A. ठीक है, A is अच्छा ठीक है, 1 2 1 and 2 2 and 3 3 1 3 and 4 and 1 2 3 4. अच्छा, in this case I think all I know is 1 तो is definitely correct. फिर तो this had to be correct now. 1 2 3 4, 1 was definitely correct now. So in this case I would say 1 is definitely correct, but pipe deals with no convertible wala part is not there. So second part is something, there is, this is wrong. This part is correct because it is private equity, and if the last one looks at it, private pipe deal often provides liquidity to the companies. Yeah, it provides a liquidity, because if you do not want to have general public, you want someone who has a hell lot of flexibility in them, then it has to be 4. 1, 3 and 4. It has to be C there. Very good, Neetu ma'am. You picked it up right. 2 was something, Anup sir, which was wrong, na? In 2, there was one point that it says that pipe deal always involve equity shares with no convertible securities. You just cannot have no convertible. Equity shares are always not convertible. They are already the ultimate part that you reach in the organization. But we are already first, and what do you want to be? Right? Oh, the answer is visible. FDI, everyone. Chaliye. FDI, foreign direct investment. I'm just hiding it up for you. ठीक है, वैसे तो there is no need now since you have seen it already, but चलिए let's do it. In terms of which of the following is true about FDI? FDI can be made through the automatic route or the government route. They can be done through any of these. Yeah, automatic is up to 2,50,000. Beyond that, you need that. Under the automatic route, no prior approval is required. This is also true. The government route requires prior approval from FIPB, Foreign Investment Promotion Board. Okay, that's one particular part that we need to know. And the last part is uh, the Indian companies can issue the specific area of non convertible preference shares as equity under FDI. That sounds really weird. We're talking about foreign direct investment, everyone. FDI, foreign direct investment, means that when you are looking forward towards foreign companies can invest in your country without much restrictions. That is how we define FDI. So in this case, the fourth point just doesn't make sense. But what about the first and second? Is it 1, 2 or 1, 2 and 3? It is actually B. Very good, Anup sir. Everyone else, go ahead and answer. Even though you have seen the answer, please be participative in it. Everybody, this is a general question. A foreign investor wishes to invest in small scale industries in India. The unit is not engaged in any prohibited activity under FDI. What is the maximum percentage of the paid up capital the foreign investor can hold? 51%, 74%, or 100% or 24? What's going to be the point, everyone? See, India doesn't allow all these FDIs to in basically exploit our country in any case, because if we allow them for the exploitation, what will happen? India will lose its most important small scale industries within no time. You know? So what will we do in this case, everyone? When we really want to make sure that our foreign direct investments can be there, but everyone, it cannot exceed what amount? Very good, Anup sir. It is actually 24%. Okay, they cannot exceed the point of 24%. It is D. Next point. Acha, the answer is visible. Just a moment. In this case, what they say is a business with high operating leverage is more likely to. High operating leverage matlab the organization is putting a lot of money in the specific sales, है ना? So when they're putting a lot of money in the sales, what is happening? Be affected by the change in the sales revenue, or the next part is their be less sensitive to sales fluctuations, have low fixed cost compared to the variable cost, or experience greater volatility in EBIT due to changes in sales volume. So what would happen, everyone? Operating leverage is more matlab you in your daily working now you have taken a lot of loans. So what will happen if you have a lot of loans because of your working? So if you increase your operations, you need more money. You need more money for the salaries to pay. You need more funding to pay the electricity bills and water consumptions and everything else that you are doing. So in this case, basically high operating leverage will bring out your worst situation. What it will do? You will experience greater volatility in terms of your EBIT. Whatever you are exactly left with earnings before interest and tax, that can change, but it can change for a better or worse, whatever the scenario is, depending upon the specific area of the stability of yourself in the market. Otherwise, it can be a troublesome thing because if you take a loan but you cannot pay it, can be dangerous. है ना? Acha. Everyone, small question, theory question or practical. This one's a practical one. Go ahead and answer. Company XYZ produces and sells 10,000 units. The selling price is 100. Variable cost is 60. Fixed cost is 2 lakh. And we're talking about the degree of operating leverage. Everyone giving you the hint. It is contribution divided by earnings before interest and tax. Whenever I do these questions now, I have a habit. I don't calculate the contribution for total. 100 minus 60 left with 40. This 40 multiplied by 10,000 units. Huh? So I've got 4 lakh rupees. Out of this, fixed cost is 2 lakh. So technically, your contribution is 4 lakh and earning before interest and tax is 2 lakh. Everybody, what's the answer in this case? It comes out to be 2 times. Okay? This is operating leverage, everyone. The answer is 2 times. Can you see the question there? The answer is B. Next point. Um, okay. The company says it produces 15,000 units and sells at 40 per unit. ठीक है? 40 minus 25. Sales minus variable cost. Huh? This is 40 minus 25 giving me a value of 15. That's my contribution. Then multiplied by 15,000 units, giving me a value of total contribution is 2,25,000 everyone. Once I've got 2,25,000 from this, remove your fixed cost. That is 2,25,000 minus 1,50,000 giving me a value of 75,000. And the question says that the fixed operating cost is given. If the company increases its sales by 10%, what will be the percentage change in EBIT? But the EBIT and sales are considered together where exactly? EBIT and sales are considered together in operating leverage. Okay, so in this case, what happens is in terms of operating leverage, the formula is basically percentage change in EBIT divided by percentage change in sales. They have given if 10% increase is there is in terms of sales. This is plus 10%. What about this same value on the below side? So you can find operating leverage normally. Operating leverage is what? That is your contri divided by earnings before interest and tax. That comes out to be contribution was 2,25,000 everyone, and the earning before interest and tax was 75,000. है ना? So what's the value of your operating leverage? Your operating leverage in this case comes out to be what? It is basically 3 times. So once you know this is 3 and this is change in percentage, what will be the percentage change in ठीक So in this case plus 10% is there in terms of your sale percentage. The percentage change in earnings before interest and taxes not known, है ना? So what we are known as percentage shares of sales, 3 into 10%, isn't it 30% overall, everyone? Go ahead and answer this question. Two different formulas of operating leverage is covered here. वैसे ना I think 30 is not given there. No, the answer is actually 30. Let me correct the question there. This has to be 30. Done. This is how you need to do this question. Everybody, look at the specific question and try it out. चलिए जी, moving on to the next point. Which of the following is exactly true about the degree of financial leverage? Everyone, pure theory question. Everyone who's there in the session, please like the session, subscribe to the channel right away. Which of the following statement is true about the degree of the financial leverage? Financial leverage matlab the leverage which is taken to upscale your working. Degree of financial leverage is relationship between EPS and EBIT. It is independent of the interest expense. It is higher of this value is lower risk of shareholders, and DFL has a risk of sensitivity to EBIT to changes in EBIT. It is EBIT upon EBT, everyone. The formula is this. So in this case, it is actually D only. Remember the formula, na? This is what I was telling you. The pure theory question is nothing but something which is deceived by just giving you this particular theory question while it is a practical question altogether. ठीक है ना? Everyone? What the company has a EBIT of 1 lakh and interest expenses 10,000 20,000. You know, the person exactly is working at earning before taxes 80,000. Everyone, from this 1 lakh you remove this particular 20,000, that means your earnings before tax is 80,000. Then the question says, what is the percentage change in EBT? How do we do this question? Let's look at the answer directly. In this case, what will you do? You will use your EBIT minus T, you get your EBT, है ना? So in this case, new percentage increase is basically what? You are using the specific formula of percentage change in EBIT. EBIT upon EBT. This is how they look forward to, na? Here they are using a similar point. EBIT is increasing by 10%. So you have your increased EBIT at 1,10,000. So you have got your new EBT as well. From your EBIT you remove the taxation, you'll get EBT. So in this case the answer comes out to be 12.5, everyone. Chaliye, moving on to the next question. Done, everyone? Look at this part. The principle of separation and cash flows. In terms of cash flows, they're giving separation principle, differentiating between capital investment and financing decisions, treating fixed and variable costs separately, ignoring tax implications, or separating inflow from outflow. What is it that we're looking forward towards? The principle of separation overall, everyone. See, technically, when we take the separation principle, na, fixed and variable cost has to be taxed separately. And in this case, ignoring tax implication on cash flows. This is what we exactly do as well. Huh? So in this case, the right answer is actually A and B. नहीं. अच्छा ठीक है ना. A, differentiating between capital investment and the specific area of treating. This is not done. You cannot ignore the taxation at all. You will have to consider it. From this only you create the tax shield now. Neetu ma'am, Anup sir, Shiva ma'am, everyone please go ahead and answer. Everyone, next question. In the project cash flows analysis, which of the following principles are correctly matched? They're giving you the principle, incremental principle, consistency principle, and post-tax principle. You just have to find the correct sequence there. Incremental principle means separate cost. Consistency means ensures consistent treatment of cash flows and discount rates. Yeah, both A and B are correct, sir. C is definitely wrong. You have to consider cash. You have to consider the taxation part. We need to be clear about the fact that where we have variable. See, if we need to know capital investments and financing decisions, we have to be clear about that. We did a similar question, not the same for sure, but a different one in which we talked about the differentiation of capital investment and financing decision. You're buying a capital asset and you're trying to cater your loans and other parts. That is different part altogether. Variable and fixed cost has to be known separately too. Everyone, what's going to be the correct answer here? Post-tax principle clearly says you are considering the taxation there. तभी तो it becomes post-tax ना. Anything that will include tax would be different altogether. So when we say post-tax principle, what I can say is this ignores tax is definitely wrong. Incremental talks about the costing before the project and after the project, whatever growth that you are seeing there. And consistency principle says that whatever treatment that you are doing, continue doing that. Otherwise, what will happen? Things doesn't remain comparable. So the answer is B is correct. That both of these are correct, but post-tax is not correct. Okay, just a moment. Visible now, everyone? Everybody, a request, please share the session, like the session, and subscribe to the channel as well if you haven't done it yet. Everybody, in this case, what is correct? When we talk about this part, which of the following statements regarding forecasting and regulation of capital are correct? See, forecasting is basically looking into the future cash flows that we can generate. Fixed assets requirements are typically funded through equity and term loan. Working capital is primarily funded through long-term loans. A part of working capital must be funded by promoters as a margin. Operating cycle duration directly impacts working capital needs. A, B, C or A, B, A, C, D or all of the above. Everybody, what's the correct point there? Working capital is actually through the short term part. This is also true, ma'am. So that means B is definitely wrong. So anything, anywhere you find B, this is not the point. So after elimination, what do we get? In this case, the correct answer is actually 2. A, C and D. Very good, ma'am. Shiva ma'am couldn't get your point. Third one was correct according to you. In this case, third one cannot be na. Working capital is always for the short term one. Done? चलिए जी. Now move